Hey folks, and welcome to the Pipnotic Symposium for the 24th of November 2022. Okay, so today we're going to talk a little bit about buy and sell zones. We're doing this because I've received many questions regarding how it's used, and we do have a few new signups. Many of them are using the buy and sell zones robot, and so we're going to talk just a little bit about that and about one of the dashboards that essentially shows the same information as the buy and sell zone robot and what the information in the dashboard means. Okay, so what I like to do is I like to have a two-chart configuration. Okay, so I just open two charts. I'll show you the configuration that we have here. So I have the supply and demand software. I've got the sync charts, which synchronizes the settings on this chart with all the other charts that are open, including the symbol, the zoom, and the period. Then I have Pipnotic origins, which you don't need, and the currency strength, which you don't need either. Okay, these are just on there because, decoration maybe. These are really nice tools, but you don't need them for this particular setup. Okay, and so this one here, I just have the histogram here, and I have the supply and demand software here on this side, and again the origins, which you don't need. Okay, so two settings, and I have the buy and sell zones algo-trader running on the chart furthest to the right. Okay, so what happens now is if I take, for example, a symbol, the Aussie CAD, and I drag it onto this one, the sync charts will sync. It'll sync the two charts, so the symbol, the zoom, and the period, and then I can see if there's a trade there I fancy. If there is, then I enable the robot, and if there isn't, then I just move on to the next one. Okay, and so if we go back here and we focus on something that's quite important, and that is, excuse me, the age of these areas of supply and demand. And so I have learned just to be careful with shorter time frame supply and demand that has been qualified many periods ago. So what do I mean with that? Well, if we zoom out really far, okay, and we look at an area of supply and demand, see most of these are holding, but let's say that I have this one here. This one here is advertising a potential short reaction, and while that is true, while this could very well result in price turning from this price point, I'm going to place more emphasis on the areas that are created closer to price. And so why would you do that? Well, the reason you do that is because throughout the day, economic data are being pushed out. The general sentiment for a trading session or a trading day or a trading week are reflected more in price now than in price a month or 3 months ago. Okay, because the sentiment from here was higher prices, but the sentiment here is lower prices. Okay, and so I am going to be more mindful of what's going on with the most recent price than I am going to be with the oldest price. Okay, and so this is represented in the dashboard. If we jump over there quickly, in the age. Okay, so all of these areas, these signals, they're sorted after age, where we have the youngest areas are closer to the top, and the older ones are closer to the bottom. So what's this doing is it's showing me that here we have a weekly area of supply on the euro Swiss franc, and it was created 2 weeks ago. What does that mean? Well, that means that we have the weekly sentiment in favor. So it's telling us to sell. It was created 2 weeks ago, and so selling at that area at this price would not necessarily be a bad idea. So if we have a look at that, let's see, just to make sure, the euro franc, let's go to the euro franc, and then we'll go to the weekly chart. We'll notice there's a sell, and the sell is right there 2 periods ago, 1, 2. So if we zoom in a little bit, it's saying, we think that prices are probably going to go down from here, and they actually did here. Prices came up to it. This one's already happened. Price came up to it. Now it's slowly starting to wriggle south off of this weekly area. And this is the way it often plays out when you consider the age of these areas, supply and demand. And we have this one here as well. I mean, this one was formed 1, 1, 2, when this when this candle closed here. So it had an age of 1, 2, 3, 4, 5, 6, 7, 8, 9 when it got filled. So it was 9 weeks old. Okay, it's quite a long time. That's just over 2 months. And price fed into excuse me, fed into that area. Wow, that's a good ginger tea. And then it started to move away. Okay, and this was a young area of supply. It was 8 weeks old. Okay, price fed into it, then it left. But if this area of supply was really old, like here, it doesn't mean that this wouldn't work. It just means that the weekly sentiment would likely have faded, in contrast to the weekly sentiment on this one here, which is more bleeding edge. Okay, and so paying attention to bleeding edge is a really good idea, and the whole idea with presenting this information in the dashboard via the age parameter, it can help keep you mindful of this, because all the good stuff is at the top of the list. You know, top drawer, top of the list stuff is the stuff that's most is highest on the list that you can see in the dashboard. Okay, so and this applies for everything. Okay, so what I do is, let me see if I can find something that I have not traded. Let's say the German, the DAX here. So what I'd do is I would go to the chart, my entry time frame, and I would find something that I think is attractive. On the weekly chart, when we have an area of demand that is formed below price here. How old is this area just here? Well, it is 2 periods old. It's the current week and this week old, and it was created once this candle closed. So this is a very attractive area to buy. And so what I'll do here is I'll go back to supply and demand software, and I'll say, well, that risk reward is a little bit too big, because that would be an enormous stop. So I'll go 1 times the size. Let's go 1 to 1 on this one. Then I'll just say, once it does that, then I'll say go. There we are. Everything's set up. Then I'll just click on the auto trade, and the auto trade will open that trade based on my risk parameters, which are very low. I'm a very low risk trader. Okay, so my entry is here, my stop is here, my target is just around here. Okay, and that's that. It's done. And the good thing about this one is that this could potentially continue to move higher, because we have managed to move above some pretty significant highs, and most highs on the weekly chart are important. So when price moves above a high on a weekly chart, I mean that requires a lot of throughput and a lot of commitment, a lot of buying or selling. This one is interesting in particular because we had a price structure where price comes down, we form new lows, we move away, we go down, we break this low, and then we break the high. So this looks it resembles what I refer to as like a shakeout, where you have at the end of a move, price kind of shakes out a lot of the market speculants by running through the highs and the lows, hitting stops and whatnot, and just dumping liquidity on the floor that is then scooped up by those who are looking to move in the direction that the pattern is suggesting, which is a little bit higher. Okay, so we also had this area here, which is very nice, an area of supply. Price came down, we tested it. So this is an arrow pointing to a liquidity pool that's just here, and we know this because price rejected it, respected that area. And price came up, we rallied, we accumulated, and then we popped up. Okay, and so this area of demand is responsible for removing this supply that was tested one time. So this is a very interesting trade. So I'm gonna do this like that. Okay, so I'm just gonna leave that on there. So that's essentially what I'm doing. It's pretty easy peasy lemon squeezy. So if we have a look here, we can see that we have this one up here, which is really far away from price, so I wouldn't take that one. But this one down here looks a little bit more interesting. So what I would do is, what you do here in a situation like that where you wanted to trade this one instead of that one, you simply have to tell it to skip a certain number of bars, and you do that using the start bar. And so I'd go like this, I'd measure from here to here, I go past that, and we are at 30 bars. So if I take this and I go start bar, So we want to start at 30. We start the analysis at 30. I'm going to do this like 1.5. I'm going to go like that. I'm just going to click it on, and it'll take this one down here. There we are. So that's what that's pretty much how I'm doing it. So if I turn it off, go back here, hit reset, so everything's normal again. Well, I'm going to leave it up for the time being. If you have any questions, let me know. Thank you very much for watching.